Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. All right, everybody, let's take a look and see what's going on with the stock market coming up this week. Today is Sunday. And let's see, today's date, January 30th. Okay, so tomorrow will be the 31st. Sunday, January 30th, 2022. The first chart we're going to look at here is a monthly chart. Do something a little bit different. Okay, start with that time frame. So this is the E-mini S&P 500 Index Futures. Look at the March 2022 contracts /ES on the TD Ameritrade platform. Now owned by Charles Schwab. Barf. Yeah, Charles Schwab. Boy, oh boy. Not one of the better brokerages, but whatever. So far, they haven't messed with TD Ameritrade. Let's hope they keep it that way. Monthly chart. So let's look at these cycles. These are some pretty big cycles here we got going on. Okay. Talking about these purple looking, funny looking arcs. Okay. For those that are not familiar with cycle analysis. Okay. So that's the past going that way, obviously, and the future is this way. Okay. So wherever we have the cycles that come down like that, usually is where we see, and they meet with this next cycle here that goes up. So right here at this intersection where they meet, usually you see a price low. Now remember, this is a monthly chart, so these are huge time frames, right? This time frame is, or I should say that the length of this cycle is, okay, the chart's being funny. Let's get this worked out. Clicky click. 78 bars. Again, 6.5 years is the length of these cycles, okay? So what are we looking at here? Well, this was about 2001 through 2003-ish. Okay, I remember that very well. I was working software development and actually couldn't get a job for about, I don't know, several months. 6 months maybe. I think I told that story before. Software developer making pretty good money. I don't remember what I was making back then, but it doesn't really matter how much I was making. I was making a pretty decent living for a young man. And somewhere in here, the money all dried up. The dot-com bubble, whatever they want to call it. I just call it poor management and interference by the Federal Reserve, sticking their nose where it doesn't belong. And as you can see, they do it over and over again. But yeah, I was making decent money for where I was at in life, and I ended up working a job making hot dogs for, I think it was $4 and like, I want to say 15 cents, guys. It was something like that. This was back in, I think the year like 2002 or something, 2001. I can't remember exactly what it was. That's what I was making, $4.15. So for all you social justice warriors out there, West Coast California, crying about minimum wage needs to be, $18 and $15. Oh my gosh. Yeah, I know times have changed, but just take a look at that number. And no, back then that was not a lot of money even then. I think I worked 15. The manager for the hot dog place gave me like 15 or 20 hours a week. That's all he could give me. So I wasn't making enough money even to pay rent. And somewhere in there I was homeless for a day or two. I mean, real homeless, like living on a park bench. Yeah, I don't ever want to revisit those times, but interesting times. And then soon after that, I was able to land a job and back into software development, making pretty decent money. So, some of it was my own fault, young man, not understanding how to save money and do all that stuff. So, life's lessons, right? But anyway, I remember that time. And I'm sure there's some people in the United States of America, even though, right now we have this inflation thing going on and we got the selected one up there in D.C., I'm sure there's some people who are struggling right now, from the pandemic to inflation to all the anti-American policies that are going on right now. I'm sure some people who are struggling financially, no doubt. So been there, done that. And then over here, this is like 2007 through 2009, I think. Let's see. Yeah, 2007 all the way through like March of 2009. That's what that is. Okay. And then over here in 2015, 2016, whatever this is right here, a little small, few months down. Okay. Excuse me. This is the pandemic right here. Okay. So you can see those cycles are pretty good. I mean, they've been pretty spot on. And here we are right here today. Look at this big old red candlestick. So what is this right here, this area? I talked about this before. This is going to be late June. Now, with these kind of time frames, it's really difficult to nail down the exact month, okay? So we're just going to say, I've been saying this, going to say it again, from like kind of late spring, okay, maybe even early spring, but most likely late springish, all the way out to, could be all the way out into the autumn, fall, okay, way over here. This is a year, by the way, from here to here. Okay, this would be the middle of the year right here. That'd be like June right there. Okay, which is exactly where this is, end of June. So just be aware that from like, late spring all the way to autumn, so late spring being more like right there, okay? So if I had to just say April through like October, and some of you may say, oh, that's not analysis. I mean, that's guessing. No, that's analysis. Because we're talking about the greatest probabilities, right? Look at this cycle, it's huge. If you can do a better job, I said it many times, go ahead, start your own YouTube channel and whatever, your own website. Get on there, let everybody know, charge people, and let them know how good you are. I'll even check it out. Okay? If it's good analysis, I'll pay for the membership every month and trade up using it. If it's not, I won't stick around. Okay? So before you start bad-mouthing me on this channel, go prove you can do a better job. Otherwise, shut up! Right. So that's the deal for this 2022. Now, I'm looking at this over here, okay? This MACD. It's about to roll over. It hasn't even rolled over yet. Okay? Hasn't even rolled over. But it will. It's way above the zero line, which is here. Got this rising 50-month moving average. Price has been doing that, right? Eventually, this is going to do one of those deals, and this is going to make its way down. Who knows? Is it this year? Is it next year? Is it going into the 2024? Okay? So this could take a while to play out. Again, it might get big red candlesticks come down in a hurry, and it may play out slowly. We'll see which way it goes. Either way, it's coming. Okay? Got massive divergence warnings going on here. Huge. You can see there's a divergence in these indicators compared to this market doing that. Market's doing that. Indicators are doing this. Okay, market's going up. Indicators are going down. And finally, here in January, it started to show up, as in huge. The range of that candlestick, 595.5, and it's all red. Yeah. That's right. The range has been 595 total range. What was the low? I think it was 42.12. Yeah. Okay. So I don't think this is done. I think going into summertime is a lot of risk, and I think these indicators are going to show that out, right? I think that's what's going to come. We'll see how it plays out. So that's kind of my long-term view on things. Let's look at the weekly chart, and I'll switch over to my weekly drawing set. I don't really like these weekly cycles, but we're going to deal with it. They're okay. Here's the pandemic. So it's decent. I see that there's some decent alignment. That one's kind of weak. This one's pretty good here. So I'm not, I'm not too worried about it. The cycles are okay. And then we had, I think this was January 16th, if I remember right. Let's see, when was that one? Yeah, January 16th, which was pretty spot on. There's January 17th. I don't know how much better you can get. There's the week of January 17th, and the cycle low is January 16th. Can it get any better? Can you really get that any better? Okay, the answer would be no. That's as good as it gets. Now, here we are on those weekly cycles. Okay, these are the weekly cycles here, the blue ones. Okay, all the way back. We're going this way in the future. I'm looking at this candlestick. Okay, and if I'm not mistaken, I think that's a. Let's see. I'm trying to remember. Is this a morning star? I think it's considered a morning star, or almost a morning star. Yeah. I think hammers are on the top, and morning stars on the bottom. There's also hanging man and all that good stuff. Anyway, this is hammerish looking, morning star looking. So with that lower wick like that, good chance we get a bounce here going into this cycle, weekly cycle here. This weekly cycle, I think, ends in May 8th, if I remember right. Yeah, May 8th over here. Okay, so we could see, it's possible we could see a bump in the market like that. But look at this, okay? Short-term indicator like the Big Daddy says there may be a bounce. The SMI is not showing it. It's like, forget that, we're going down. MACD says we're going down. Okay. But there could be some price stall in here. I mean, it could happen. We could ride along this. It's possible and come up and do one of those and then bamski. Okay. It's possible. For now, though, the market looks weak. Okay, so remember, that's May 8th. Okay. That's my funny looking 5. May 8th. Okay. For my international friends, I'll just do it like this. May 8th. Okay. That's this right here. Okay. I'm sorry. That's this one. My bad. Forget that. This one. May 8th. Yeah. So again, to me, that just confirms and helps solidify the premise or the assertion that, you know, spring all the way to early autumn through the summer is a risky time. Okay, let's take a look at the daily chart. Let me switch over to my daily drawing set. So here we are. Okay, and back here was the, let me just roll back here a little bit. Back here was the quarterly deal, the quad witching, that big old decline. And then it just started getting messy. Look at this, messy. Couple times it right away revisited the 50-day, and then when we got that candlestick right there, guys, I'm like, okay, this is it. This rebound is not going to last. I even said that back then. I said, this rebound, don't expect it to last, and it didn't. It crashed, bang, boom. Okay, now we're well below the 50-day, right? And got some, you know, this stuff right here kind of reminds me of this over here, right? During that quad wedging, those days, it's just chopping along. So we could definitely see some price increase going on here. It's possible. I think this was February 3rd, February 6th. I did say I thought anywhere from February 2nd all the way out to like February 8th or 9th was going to be the riskiest time. Okay. Which this is pretty close to that. Okay. Might be a little early. We'll see. It could do one of these little bouncies and then come right back down into this February like 8th. It's possible. Or we already have gotten a low right here, and that's fine. It's a week ahead of time, whatever. Who cares? Okay. Looks like the Big Daddy and the SMI are showing there's going to be a bounce. And if that's true, we'll possibly reevaluate these daily cycles if we have to. For now, I'm going to keep it right where it's at. Okay, I still think that we might see more price decline. Like you might get some stuff like this, and then maybe it just flattens out. Maybe it comes down. Maybe it just deteriorates right down into here. We'll see. Okay, but it may get strong and then flatten out and have a little price decline right there. I've seen that happen too. There's a lot of different scenarios that could happen as we get towards this latter part of the first week of February, right? From February 5 through 9. Okay, that's this area right in here. Okay, first week and a half of February. That's what this is. So I don't know if we're just going to chuck sideways and it just stays flat down here for a while and then goes up. Is it going to go up like right away on like coming up this Monday and then kind of flatten out and that's all we're going to get for the low? Sometimes it'll do that. And then we'll see what it does going into this cycle. Is it strong? Is it just weak? Yeah, there's several different things that could happen as it approaches this time, the end of these cycles right here. Okay, so we'll be keeping an eye on that. For right now, it looks like it's trying to show some strength here, but the indicators are showing like there's going to be something going on, but the price action hasn't supported that. It's just going this way, right? So it's going to be really important for those that want to know daily cycles and daily price action. Really want to keep your eye on what's going to happen through that first week of February, all the way to the end of that first week. Okay? So all the way through like February 7th. 7th, 8th, whatever. You want to really keep an eye on that price. I wouldn't be trading long. There's no way you're going to convince me to trade long right now. Ain't going to happen. A lot of chop going on. I'm not trading long. I want the market to prove to trade long. That candlestick right there, that's proof. Now you can trade long. You're above the 50-day moving average. Trade it. Remember, daily chart, right? So once this candlestick got above that candlestick right there, on that day right there, you can start trading it. And of course, the next day and the next day is great. Okay, you need your short-term indicators to tell you, okay, be careful, as you start getting kind of toppy, right? You want to make sure you don't take too big of positions, right? Start tapering off your positions when things start getting peaky like this, right? But for right now, this is just going sideways. Okay? Okay? So I would not trade long right now in the S&P 500. I don't care if you're trading ETFs, you're trading futures, you're trading options on futures, whatever you're doing. Yeah, I wouldn't go long yet. And then this is more swing traders I'm talking to. Okay. Swing trader anywhere from like a day or two all the way to a few weeks, right? That's swing trading. Okay. And hourly and less, that would be your intraday stuff. All right. So I'd wait for anybody that's trying to do long side trades. Be a little more patient because the market's got to prove it, right? Don't jump in long right now. It's okay not to trade for a couple days, guys. For you day traders, I know that's hard for you not to trade, but it's okay not to trade. When the market's chopping sideways, there are option strategies for this kind of time frame, this kind of stuff. Okay. There are some option strategies in there, but, it'd have to be probably the weekly options to really take advantage of it. And not many people trade the weekly options. I know some do, but. So I'd wait to see what this does. If you get a nice, good, strong bounce. And remember, we're way below the 50-day moving average. Way below it. So it's not easy to trade long below the 50-day. Okay, I don't like that type of trading. I'm not saying I'd never do it. Okay, but it's risky to trade long below the 50-day moving average, 50-week moving average, 50-month moving average, 50-hour moving average. It doesn't make any difference. It's tough and risky to trade long below that 50 average. You're below it. Don't forget that. That's where we're at, like well below it. If in the next few weeks, week or two, or whatever it takes to get above this, if it gets above it, okay, now you go long. Meantime, I'd be favoring short side trades below the 50 until the market proves otherwise. That doesn't mean there isn't going to be big green days. There could be. Okay, and for your intraday traders, you can look at your shorter time frames, and you could take advantage of that. Okay. Now I'm about to do something I don't normally do. I'm going to look at the hourly chart for the general public. Okay, I'll never do this because premium members pay for this. Okay, but I'm going to show it just so for the people who are out there in the public, so you know what you're missing. So let's switch over to the hourly. Okay. And I'm not going to, you could look at the chart, and you could look down here at the bottom. You can kind of figure out where I think the hourly time frames are going to be. You can see the days down there. But I'm not going to zoom too much into the exact hours, because I want my premium members to get their money's worth. Now, they get more than just this. They get all the other futures products. They get crude oil, they get gold, they get natural gas, okay? They get wheat, they get oats, they get live cattle, they get feeder cattle. I'm in Texas, so I do the cattle. A lot of the ranchers here. And throughout the country, look at the charts, okay? But this is an example of what you would get, okay? You can see right here. Now tell me that's not good timing. How about this one? Off by a few hours, but look, it's pretty close within a few hours, right? So the one we're about to come up now, this one over here, the market's is really in opposition of this cycle, hourly cycle low. This is the hourly cycle low right here, or the hourly cycle, okay? So sometimes when a market is strong like it is right now, you can see it's right. It looks strong on the hourly chart. So you might just get like a flattening out, and you don't get a decline. Okay, sometimes that'll happen. Sometimes the market will just go flat. It won't decline down in there because it's up. It's moving up, and that's okay. That's useful information. If you get something, if we for the premium members and for the general public that's getting this one-time free look at my hourly chart, okay. If as we approach this hourly low, cycle low right here, if the price action just goes sideways, okay. Obviously, this is going into Sunday, okay, which would be, for those that don't know, the futures market opens up Sunday night, 5 p.m. Central Standard Time here in the great state of Texas. Unlike other states like California. That's right, I said it. You don't like it? Don't watch my content. Don't care. So, going into Sunday night, there's a projected cycle low, okay? But if the price action just goes sideways and doesn't come down into that, that's useful information. What does that mean? Well, it could mean the cycle low is going to be delayed and comes later. It also could just mean that this hourly cycle is going to be stronger than it's going to be fairly strong, that the price decline won't be much, and prices will go up. Okay, so those will be things that for those of us that do cycle analysis, we're going to be paying close attention to that. We're going to be looking to see, has the cycle moved? Because sometimes these cycles will move. Has the cycle moved, and is it just happening later? That's okay. We adjust. Or does it just flatten out, maybe a little down, but not much, and then takes off? That's another. So that's all useful information. You just got to know how to properly assess it. Okay? So there you go. That's the hourly. And for the general public, yes, the premium members definitely take advantage of these type of things. And why not? Okay, why not short your, why would you not, short futures right here? You know there's going to be a cycle low. Why not short it? Here's one that came a little early, but so what? I talk about this all the time to my premium members, that halfway through the cycle, you're looking for anything on this side to start for price decline as you approach these cycle lows. Okay? If it doesn't happen, okay, sometimes it doesn't happen, but it happens more times than not. We're just trying to get most of the trades. Okay. The ones we don't get, we use our risk management and we either cut the trades loose. Okay. But I don't recommend anything. I give my opinion. My opinion is, for me personally, and for others, to always start your position small. And then if you see the prices decline into these cycle lows, you can increase the position along the way. Okay? If it doesn't begin to decline, then you only have a small position and you may have to cut it loose and take a small loss. Okay, that's trading. But at least you didn't take a big loss. I see way too many people take big positions right in the beginning, get caught out, have to cut it loose, or worse, they don't cut it loose till much later, then they take a really big loss, then they're emotional, and then they think they're a failure. Why? Because been there, done that. Been there, done that. You know what I'm doing mostly right now, guys? Well, I'm working a full-time job, so I don't get to trade as much as I used to, but even if I was trading full-time, I'd be in fixed income right now, which is what I'm in. I got a lot of fixed income going on, corporate bonds. Because if I'm going to park my money, I'm going to park my money and make good interest. Okay? But I do think this is a trader's market to the short side. You just got to pick and choose the right times, okay? Short side trading, I think, is going to be the thing of 2022. Yes, there'll be on the daily chart. Switch back to daily chart and finish up this video. Okay? Yes, there's going to be rallies because that's just part of the market. Okay? Let me switch back over to the daily drawing set. There's going to be rallies. Okay? If I can get a marker, this thing's being funny now. For some reason, I got the highlighter. You get the highlighter going on. Okay. So there could be rallies like, into this cycle here, which is, second, third week of February, whatever. Could start seeing prices coming out, going up. It may happen a little early here. Okay? It may be happening right now. We may be seeing it doing it now. Or it might fiddle fart around and come up here later. All right? So there's going to be rallies. There's going to be green candlesticks. That's going to happen. It isn't always going to be all red. But for 2022, I think the first half of the year is a trader's market. It's going to be to the downside. I think those are the real opportunities, and I think there's going to be lots of opportunity for short side trading. Okay, so if you want to trade options to do that, that's fine. Me, I like to trade the futures products, and I like to trade the E-micros because I can really customize my position size. If you have a bigger account, fine, go with the E-minis. Later, I don't know if I'll do it today, but I'll look at all the other futures products for the premium members. So for you people that want that, look at the screen right now, $5.99. Take advantage of it, super cheap. After Google takes about let's see, 6, I get $3.80. Google takes about $2.10 or $2.20 out of my pocket. That's right, I get about $3.80, $3.90, somewhere in there. This is because Google sucks. YouTube, Google sucks. There's no other way to say it. But $5.99. It's a really good deal. You get that hourly chart that you just saw. Plus, you get all the other futures products I mentioned earlier, okay? But for the premium members who are watching this video, because I'm just going to put this out for everybody today, okay? And I'll just mention on the Discord server to the premium members so you can come and watch it. I'll cover the grains, okay? The grains have had a little bit of a rebound, but I'll cover that for the premium members. Don't know if I'll do it today, but I'll probably do it in the next few days coming up here. So be on the lookout for that. Okay, for everybody else who wants to join this premium membership, you know what it is, $5.99. You get a link to the Discord server. You get to talk with other traders. There's quite a few channels on the Discord server now. There's S&P 500 channel. There's a NASDAQ channel on there. There's a general chat channel for members. There's a solar channel. So occasionally I talk about solar cycles because they have a lot to do with trading and other things that go on the face of the earth, like grains and cattle rely on the strength of solar cycles, believe it or not. There's fixed income channel on there, which, matter of fact, just yesterday I posted a picture on the Discord, that Discord channel, fixed income, on the Discord server, of some bonds that I bought. Okay, so you don't get this unless you're a premium member. So take advantage of the $5.99 because that's crazy, stupid, deep, dirt cheap. It is. That's stupid cheap. I don't know why I do for $5.99. I don't know what I was thinking. I need to up that. Okay, because you guys are getting it basically for free. All right, that's it for now, guys and gals. Hope everybody enjoyed the video. For those that don't want to pay for the inexpensive $5.99 because you're a cheap bastard, subscribe to my YouTube channel, give me a thumbs up, and click that little bell to be notified of all the videos that I put them out. But even though you may click the bell, because YouTube and Google are such a kind-hearted organization, they've been unsubscribing my subscribers. Yeah, gotta love that. So you might not even get notified. So if you really want to subscribe, you might have to check your subscriptions once in a while and resubscribe, because YouTube and Google suck so bad. Yep, aren't they just the sweetest of all time organizations? You know, they don't like conservatives like me, so they make sure they give me the most difficult time possible. Unsubscribing my subscribers, basically blocking the content from getting out to the general public. I'll be shocked if other people other than already people who subscribe watch this YouTube. And I'll know from the analytics. I'll be shocked if it gets out to the general public, because Google, YouTube, you know, they don't like Christian conservatives like me. Oh no, we're the bad people. Yeah, we're not the people up in D.C. who the selected sitting in the White House. You know, not the Nancy Pelosi's, not the people that pay illegally fund millions and tens of millions of dollars for drop boxes. No, not them. You know, not the Hillary Clintons. Oh, no, they're not the bad people. No, us Christian conservatives, we're the bad people. Anyway, I digress. Everybody have a great day.